Chapter 2, Financial Accounting. We're going to try a few transactions using the rules of debit and credit. These are business transactions. I will talk about what the business did and how the transaction fits using the double entry system. Let's say that the business, first of all, receives $100,000 in cash from the investors in exchange for common stock. So we will put that $100,000 into the bank account. The bank account is called cash. Cash is an asset increased with a debit. Common stock is part of stockholders' equity. It is increased with a credit. Let's say that the business buys a computer for $2,000. A computer is an asset. We will debit and put on the left-hand side the $2,000 for the computer to show that we have an asset and it is increased. We will credit cash to show that we wrote a check for $2,000 for the computer. Our debits and our credits are still equal. Let's make the assumption that we earn $3,000 in this business in cash. So we will place the $3,000 in cash by debiting cash, which increases it, and we will record the $3,000 in revenue. Revenue is increased by a credit. Credits are recorded on the right-hand side of the T because revenue goes under stockholders' equity. Let's say now that we pay our rent expense for $500. We'll record that rent expense. It's a debit because rent expense makes stockholders' equity go down. It has a debit to increase. And we paid it with cash, so our cash goes down. Final transaction. Let's say that we buy some office furniture, and instead of paying for it, the store that we buy it from, let's say it's Staples or Office Depot, allows us to sign a note. So we borrow the money. So we get $5,000 worth of office furniture, and we own it. Office furniture is an asset. You debit assets, that goes on the left-hand side. And we signed a notes payable, so this is a liability for $5,000. It goes on the right-hand side because liabilities are increased by a credit. I hope this helps. Just some very quick transactions.